What's up, fam? It's your boy, and you already know what time it is, baby. Hey, man, over here we're talking about the SPY again, nearing record highs, almost like the Omicron variant did not happen. Well, is this something that's a positive for the markets, or are we nearing a pullback that we still have not yet seen just yet? As a matter of fact, there's a lot of people out here talking about, man, we may just be inching closer to a huge reversal that may be even considered a crash. Well, I'm here to talk to you about today about marking these dates once again, because now we are closing in on catalysts that matters the most when it comes to SPY. As a matter of fact, it matters the most for your boy because he has SPY $500 calls for 21 January 2022, and I have not yet sold off of one. Is that a mistake of mine, or am I seeing something that a lot of people may be snoozing on? This is a video that you do not want to miss. This is a video where you want to stay tuned because I'm going to give you my technical analysis updated as of what we've seen in the market today and talk about price action. As a matter of fact, if you've been with me for a while, you already know how we're going to start this. We are going to start this with the VIX, okay? Man, the VIX has taken off so many ways fast forward in the last week, as we have talked about a lot of these things in the pain and we have dealt with in the market. As a matter of fact, the VIX got up to its essential high that I've already discussed previous times of 35.42. We had not yet seen a level like that since absolutely January 28th, 2021, as President Biden had just returned into office, and we had all the things dealing with the insurrection. All these things played a part of the volatility in the market and uncertainty and what was going to happen next. We cooled off like we always do, and when we cool off, this is where we actually see momentum and prices pick up in the market, okay? Now, a company like Apple, one of the biggest companies in the world, actually being at all-time highs, as we go over to the chart and look at it, shows you what the VIX actually plays a role in and how the markets actually see what is really going on there. Apple has not been to this level ever. This is crazy. A company that's valued at this type of level, moving at this type of price, is absolutely astonishing, okay? As a matter of fact, I had Apple calls that I've been holding since earlier in October, and I sold those off for a gain. Then I had calls in November, sold those off for a gain. And then I had calls in December, sold those off for a gain. But then I had calls in February, and I just hit my Discord family up today and let them know your boy had the bag out of those calls, because now I see Apple is going to have to retrace. It's at a level that I think is unsustainable at this point in time. And I still believe it will move up again, but I would like to buy them again on a retracement, secure the bag now, and get more paper with this play overall. Now, let's get into what we're really here to talk about today. We're here to talk about the SPY, okay? Essentially, what do I see happening with the SPY over this time frame? It basically has worked out systematically to the approach that I have been taking this whole time, and wondering and having people wondering, second guessing, why am I holding this position so long? Now, what I will say is that maybe I should have averaged down at some of these levels, but this is what I don't want to do. I don't want to actually get myself into a situation where I average down too early, and then news get worse with the Omicron variant, and then things didn't play out in the markets that we need to. But now we're at a point where certain catalysts are about to take shape, about to take form, and now we are now getting ready to make very, very good educated decisions on things that we are seeing trending in the market. Now, do not forget, we have CPI data coming out this week, and we're approaching that level right now where we need to be worried about indecisiveness in the market alongside the FOMC meeting that we're going to have here. As a matter of fact, what I want to do is actually show you the calendars to make sure that you're keeping track of all the things that's going on in the market that we need to be aware of. You can head on over to the calendar of schedule of new releases over on the Bureau of Labor Statistics and actually look at this information for yourself. But as you'll see, we're 2 days away from the consumer price index actually being something to worry about on Friday around 8 o'clock, 8:30, and you will see where we're getting November's economic release of inflation, okay? And see where we actually sit at this point in time. quite honestly, we get the producer price index on next Tuesday as well on the 14th, and that is something to pay attention to as well. So I really want you to mark these dates down. There's something that you actually need to worry about, okay? And then absolutely one more thing that we need to check out and understand when it's going down so you can make the right decisions with your money is actually looking at the FOMC meeting schedule, okay? Now let's go over there and check out that calendar on the Federal Reserve. You can actually just Google FOMC meeting schedule and it'll show you when is their next meetings actually happening, okay? So we already had the 12 December, we down here to 10 December. So the FOMC meeting is actually Wednesday, 12/15, December the 15th, where you actually see it starts at 2 p.m. that evening, okay? So to me, these are things to consider. Now, what I want to actually do and actually want to break down for you and tell you the reason why I think this is important is because the tapering is things that we are still worried about, things that we are still concerned about, and understanding how this rate hike may happen and the acceleration of the rate hike can now lead people to start making decisive decisions in the market about what is an overpriced company coming about and how this is going to affect corporations over the long term. And kind of honestly started to make that transition and shift to actually start investing in the banks again in the financial sector, because these banks are going to run when actually the government take their money out of the economy and they let the economy go back to surviving on its own and thriving on its own. And banks are going to make headwinds with the loans that they're going to put out and the money they're going to start to capture and the funds that they're going to build up in their reserves, okay? So this is important to me, all right? Now, let's talk about the SPY, though. Let's talk about this on a technical standpoint. I want to get into this because I want to really break this down for you where you understand from a technical standpoint what I am looking at, and I like to give you my updated momentum on this play and understand where I actually believe that we're actually trending towards. Now, I have an invested interest in this. I'm really not going to try to play like I don't want to see SPY go to 500 sooner than expected, but I also understand strategically that this cannot just go straight to the moon, because the sooner it go to the moon, the harder the fall is going to be, and all that froth is going to build in the market, where people would then actually start to see that this could be an economic recession that we deal with if this thing goes straight to the moon. So systematically, it has to approach levels that make sense. And today we're going to talk about some of those levels here as we actually do this charting, okay? So let's look at this, okay? Now, overall, I have talked about this over and over and over again, right? That I have drawn out my exact trace of what I'm looking for when it comes to the SPY. SPY to me on December 7th, yesterday, was supposed to make a move down here into this wedge. But we got such a good pump in the market due to the fact that Omicron variant has become in as a mild situation to deal with, that it has allowed for this to get the markets to actually start recovering. Now, today, I was actually suspecting after this move here on the 7th that we was going to actually see maybe a comeback down to the trend line. Today, it finished in a positive note due to the simple fact that Pfizer and BioNTech came out today, in my opinion, and said that the Omicron variant can actually be taken care of and actually not really of a major influence if you get a third shot, essentially a booster shot, okay? So to me, that led to me to say, okay, the markets are actually going to take this situation in stride and in good news. And now we have recovered back to the levels previously to when the Omicron variant news actually came out. Why is this important? Because now we are now approaching about $4 away, 4 points on the SPY, where we are away from the all-time highs. This is quite important because if we break this ceiling, we go into uncertainty, and we don't want to see a gap. We don't want to see a gap up from this trend tremendously, okay? What do I mean by that? Okay, so basically what I'm going to do is actually going to show you by a drawing that you do not want to see the SPY go from here, 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 here. Imagine these are candles, and then you see a move up this way, where it gets away from actually the trend line that we have drawn here and this trend line here. We want to see it systematically actually go in a direction that really makes sense. And we're going to actually show that again here. We want to see that move come from actually here, 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 here. You want to bounce it here. And then you may see a move where it actually goes like this, but that move is way later down the road, okay? You don't want that to be here on this approach right now, because the tighter that it stays to these trend lines, the way the market works, the market sees that we're actually moving at a steadier pace, right? But when we get to a point where this thing actually pulls away and veers off the tracks, way off the railroad tracks, we see here, let me delete this real quick. You'll see that we get off way off the railroad tracks where we start seeing moves like here, 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 here. This leads people to believe that that crash can come back here, okay? And this is the overall macro trend line that I actually have here. I'm sorry, let me actually delete that so we can actually make that right. You'll see that the overall macro trend line is actually here. And that will be catastrophic. We would start breaking levels that we don't want to break. We've already came back here and retraced here, so we want to pay attention to how this thing actually moves. So theoretically, the way that I would like for this to happen is to actually see that it actually bounce here, bounce here, bounce here, bounce here, bounce here, bounce here, bounce out here, and up, okay? Like that. So that's what I think should happen. So hopefully we'll see that. So really truly, that's the technicals that I'm using right now to actually see what's going on in this market and the things that I care about to see actually overall. Now, if you're getting value out of this type of content, definitely hit me with a like down below. Definitely comment down below. What do you think the current price target would be for a SPY when we approach 21 January 2022 on these option plays? And also definitely hit the subscribe button if you finding value in this from your boy. I appreciate you all. I want y'all to stay safe. I'll catch you in the next video. Peace.